Good morning, everyone. Excuse me. Dear me, not been up that long. Good morning, everyone. Hope you are well. Here we are Tuesday the 6th of January. Happy Epiphany, those of you that are celebrating. I know a lot of my friends in Eastern Europe, Orthodox Christians, celebrate Epiphany. Slovaks, Russians, everyone celebrating the arrival of the wise men to see the newborn baby Jesus. Stock markets continue to rally. The Dow, in particular, yesterday benefited from the big move in oil-related companies. So Halliburton, I think, were up about 10% at one point yesterday. They closed up 7.84%. Halliburton, the big oil services company. Chevron also up 5%, and other oil invested production companies also rallied yesterday. Oil itself was all over the place a bit yesterday. If we just look at the actual oil market, 58 we trade at the moment. This is the fine. Let's just go to the hourly chart from yesterday. We'll come back to trading the open in a minute. So we peaked yesterday on the US Open, basically. So we'd gone to 58.50. You see here on the hourly chart, the previous sort of resistance zone we were in. Then above that is this 59 zone, which we haven't got to for a while. And 60 is off the chart here in this hourly chart. You see there's 60 all the way up there. So we've drifted from that 58.50 top into US close yesterday. Now we've drifted again this morning in the Asian trades and opening London. It's a bit early for the London market at the moment, but we are back to 58. So 58 holds. It's still relatively well bid given the downward movement, and obviously the trend remains. Here's the daily chart. You can see the trend remains to the downside. We had obviously that big up day yesterday. How much of that are we going to hold? And that's really what our oil traders will be watching. Really, the key for the rest of the week as well will be obviously the range that we put in yesterday and where we go from here. But we're above 58 at the moment. But does it change things? Lots of comments yesterday about it's Venezuela's not producing very much. There's not a lot of storage left, so they're going to have to cut production anyway. They're only 800,000 barrels a day. It could be much more, but it's going to be a year probably plus before the impact of any infrastructure investment pays off for the wider Venezuela company. And then obviously the argument is, how much is Venezuela actually going to benefit? Is it all for, is it a political stunt from Trump to divert attention away from the pressures around the Epstein files and other things as well? But anyway, this could really mark Trump's tenure, this move on Venezuela, or not. See how history reports it. It's all quiet and calm. There's no further ripples around particularly Latin America or around the rest of the part of the world. Yeah, time will tell. But anyway, oil struggling at 58 and the downtrend. I wouldn't be sort of buying this in any time soon. So let's have a look at what we're supposed to be doing today. We are trading the open. The DAX already triggered for us on the 5-minute time frame. So we've had so the trend is very much up. All-time highs yesterday. The Dow was the best performing, up on close yesterday. Dow was up 1.23%. The Nasdaq was up 0.69 of 1%, and the all-important S&P 500 closed back over 6,900, up 0.64 of 1%. And futures are stronger this morning. The Nikkei in Japan. This is the daily chart again. So up on Friday, up on Monday, big up day yesterday, and new all-time highs on the Nikkei as well. Markets in Korea and I think Taiwan as well, ironically, were at all-time highs as well. So strong move here. You can see on this daily chart, the stochastic still moving up into overbought area, but we are at all-time highs. So try and think you can catch the top and short this. There will be positions in place, no doubt, higher up, but Nasdaq, the Nikkei here remains bid. So let's back to our 5-minute short-term trading. We caught a bit of a short earlier. Obviously, the trend is up, so we'll be looking for, in the higher time frames, the 4-hour time frame, we're looking for to go with the trend. However, obviously around open, which is still 20 minutes away, we look for what's going to go on in a mean reverting strategy. Remember, with this strategy, the Bollinger Bands and the stochastics, remember, set at 10, 6, and 3. Thank you, Trevor Neil, for that setup, and it works quite well on this short term, and it works really well. I like, if I'm trading the indexes, I'll trade the DAX and the Dow around the open, around the close, and we've already been successful this morning. Out at in at 24,934, out at 24,921. And then second target was taken as we've hit the outside the Bollinger Band here at 725, around about just under 24,900, 24,904. I think I got filled. But we continue to move down because remember what we do. We take target 1 at the Bollinger Band and target 2 at the outer Bollinger Band midline. Target 1, target 2, the outer Bollinger Band. Obviously, this works going long as well. So now, having burst through or touched the outside of the Bollinger Band down here, and gone short here. Continue to move down with the stochastic still moving down. So again, this could have been a continuation trade, but because we've had success on one of that, I entered that again. I might have left some on actually. As you get more sophisticated with, instead of just doing obviously when you start, people tend to open a trade, close the full position. As you get a bit more experience, people start to do partial closes or trade. Build a position on the longer time frame. That's what I do, and then come out in parts as well. So you might have only closed like 20% here, 20% here on that first, or another 30% here or something on the touch of the outside of the Bollinger Band. Remember, this is a mean reverting strategy, so we're looking for it to turn back up, and keep another bit on in case the continuation trends like we see here with the stochastic is still moving down. So until these cross, we won't be going long here. But you can see what's happening with the Bollinger Band. See how the volatility has increased, the volume's increased as we're coming into open. If I put the volume indicator in, to be mindful that these aren't real. It's not real volumes from the exchange, but you can see that how the volume picked up there probably at 7 o'clock. There we are, 7 o'clock. A big pickup in volume as the certainly the German traders are at their desks. This is 7 o'clock my time, 7 o'clock London time. So that's 8 o'clock in Frankfurt. So they've been at their desks a half an hour at least. Big volumes here. You can see around about the close and the open here. There's the 2100 hours. That's the European, the US close, the 21 hour. The 9 o'clock, 9 o'clock my time, 2100 hours. That's the US close. Volume's picking up there, but so we're still trending down. So if you, as you get a bit more sophisticated, whether you can sort of trade the trend. So we remember what we've done. We've gone to all-time high. So the pre-market high here. Remember, we always put on the pre-market high and pre-market close. So that's not there. So that's an all-time high on the pre-market. We'll change that to. Is that a gold one or something? There. And so we had a strong day yesterday. So our open this morning was down about here, wasn't it? Down here. So this is our this is our range so far today. So the pre-market low was down about here. So 24,845, say, for the sake of splitting things, and that's our pre-market range. And again, you could say, well, what's the sort of travel distance we've seen? Well, it's biased to the upside. Where might we stall? Well, this is the Fibonacci range for the day. If that's the top and that is the bottom, so we've assume that up for you. We've been through first level. The key 61.8 has been breached quite significantly. See where it was? It sits right on the Bollinger Band there. See? So it's another nice indicator that's backing up what we're saying here. So another nice target there. It's breached it quite significantly here, hasn't it, on the 5 minutes? So that hence the idea about staying short with this, why we're still running down. So what we do here, say if we taken 50% off here, 30% off here or something, we still had 20% on, we would wait for this on this 5 minute time frame. Now we'd wait for this the fib level, either a fib level to hit, or more importantly, for the the way this system works, it's all to do with the K and the D line on our stochastics to cross. So we're looking for either a touch or a cross of these two to go long. But certainly a touch would get us out of the short position. But bear in mind, if we've been short from all the way up here down here, don't risk, the next trade giving it back just because it's gone down. It might necessarily move up. This might be a false move. Remember, very much against the trend, but everybody's waking up to, in Europe's waking up to, all-time highs in the Dow, strong close for the rest of the US stock markets. Asia has followed through with gains. You've seen the Nikkei. Let's quick look at in Australia. Australia, some Australian data. So, but it's still, you can see it's up yesterday and down today. We'll come back to Australia in a minute because some of their data has come out. But if we go back to the 5 minute and come back to our trading platform, DAX. So we've made a nice start, very early in the morning, pips in the bag already, and going ahead with the rest of your day. So the 61's been breached here on this 5 minute fib level. The 50's been breached now. So this may be enough of the move. So see what happens in the next 10 minutes as we go into the open. So just watch that as we go forward. The Dow. Remember, obviously the Dow isn't actually opening, but again, you can see a similar pattern. So short would have been entered there. See the cross of the blue coming from above to below the orange. We've already touched the outside of the Bollinger Band here. We've been going up here. So your entry on this one would have been at that point there. Again, because the midline of the Bollinger Band is a bit close, we'd have probably left some on, see if it goes out. Stop loss up here, the turn of the day. Again, you see how we've excuse me, pre-market highs has been touched 3 times there. See that? This is the pre-market high. That's our stop loss. That would have been the stop loss. Put that as red. So that's our stop loss here on this 5 minute. Entry here. You could have taken some off there, but wait for the. I'd have still been, as this has breached that quite nicely. And now another time, might have taken some out there as a first target. But again, you can see we've moved down. We haven't quite touched the outside of the Bollinger Band here with the Dow. So I'll be wary now. Having got in at this the orange line here, I might be wary of not taking any profit because we didn't take any off because we've got flatlined Bollinger Band. I'll be wary of watching this. This can stay stuck together and above and below for a while. So I'm still short. My stop loss would certainly have been down below my entry now. So I'm locking in some profits and probably below that, around about that candle there now. And I'm just waiting if that either reverses and we make that little amount or we continue to move down. So the Dow's still short. The DAX is still short. Let's have a look at elsewhere and we'll come back to those two in a minute. So crypto's benefited. We were up yesterday. Stocks are up. The dollar was up yesterday. Dollar's come off a bit overnight, but stocks are going up in unison with Bitcoin. So it looks like there's some correlation there. 93,124. As we said yesterday, the key thing was the breach of the 92 level on Bitcoin yesterday. Overnight, last night, we got to 94,700. We've come down in the Asian session. Let's get rid of volume. Let's get him away. Oh, individual, can't we? We've come down in the Asian session, but we're still holding the key 93. If we go up to the daily time frame, see what a strong sessions we've had over the last week or so, but the big one yesterday through that 92 level, so into 95. So significant resistance to the 94, 95 level and a breakout over here. So tentative long potentially. Obviously, this strategy is looking to potentially short if we can't break through here. So lots of eyes on this 95 level. Tentatively on a shorter term basis, I'd have been added as we'd gone through the 92 yesterday. Yesterday on open basically. So it's had a strong day yesterday and might have closed out that on the upside. So Bitcoin remains tentatively long. We looked at energies. Forex, we look at the trades we took last night. Yesterday we ended up flat after all of that. We had 3 trades from Friday night. 2 I closed out early. One of them actually reversed and went to target. The other one continued to its stop loss position and then went weaker. I can't remember which they were. We'll have a look at them in a minute. And then we had 3 trades last night as well. Cable was one of them, I remember. Again, we'll have to have a look at what we posted on our Discord group. So if you look at the dollar crosses, euro 117.34 this morning. So euro's still holding its bid. So the dollar's weakened a tad in the European session. So we closed last night around about this 117.20 level, and it's weakened again overnight. Dollar yen 156.30. So again, yen coming back against the dollar. So that's a nice resistance up there. That's a nice downtrend from yesterday morning. So that downtrend from yesterday morning is still in play. So as we said yesterday, we got to 156.20 yesterday. So we went back to test our pivot area from yesterday this morning in the Asian session as we started, and then we've been down. So dollars are relatively weak. Sterling was one that we took as a long position last night at 134.50. We got in around about close, just ahead of close last night. That's in the money, 50, whatever it is, 134.55, 15 pips. Targets up here about 30 or 40 pips away. Stop losses all the way down there. But that's a long position that was open and live on my trading platform. And now you can see here this strategy, though, it's topped out already, hasn't it? Down, but it's a trend following entry on the daily time frame. So different time frames, different setups, triggering different positions. And that's what trading's all about, my friend. Aussie data. Let's have a quick look at overnight data. We've got PMIs coming today, for relatively quiet. Where's my calendar gone? I keep meaning to let the bosses know. But so inflation data overnight tomorrow from Australia. There's no high impact events today. The red ones here on from Forex Factory. If we just add in the medium events, which can be quite moving. We've got German federal state, at the state level, they release inflation all different times throughout the day, and then we get a composite at the end of the day. So that's coming out at the moment. That's really the only other main data that was watching the euro. Today, again, if we go down another one, but this is what a lot of traders will do. Unfortunately, they will hunt for trades. So there's no high impact events. So they want to trade. They haven't got the patience to ignore things coming to them. So they'll go hunting for trades. So services PMIs across Europe are coming out this morning. Obviously, quite significant as they're forward looking. But you can see here on this calendar, Forex Factory deem Spanish, Italian, French, and German services PMIs as sort of minor events as far as moving the market. Obviously, it's significant for their economies. So we'll see what that data looks like in the next half an hour or so. UK one's coming out at 9:30 my time as well. So that'll really the thing for markets to look at today. Not a great deal of American data this afternoon. But it's really all about later on in the week when we've got the jobs. We've got European inflation tomorrow as well. ADP on Wednesday, JOLTS and ISM services out of the US tomorrow as well. So and then obviously the major jobs news on Friday. 59,000 is expected for non-farm payroll. I'm saying a big spread. It's not a particular spread. As I said yesterday, that I haven't checked it this morning. Might have been trimmed. Normally gets trimmed or changed after ADP. But the Wall Street banks are looking at a low of 25,000 and a high of 150,000. So there's 125,000 range on a consensus of around about 59,000 for non-farm payroll. If I look at we got the right down here. You can see here non-farm payroll 62. That's been upgraded from yesterday at 59 here. So that might be a Reuters feed rather than the Bloomberg feed, but around about 60. Let's call it 60,000. But eyes on unemployment rate. Some are talking about it hiking. Kashkari yesterday, Neil Kashkari, one of the hawks on or potential hawks on the Fed, sort of warned markets that this rate could actually rise quite significantly over the coming months. Particularly, don't be surprised on Friday. So whether he's got inside information and he's saying things he shouldn't be saying, who knows? But that sort of caught attention on Friday. And then also the other key data on Friday after that is this stuff out of the University of Michigan as well, the consumer sentiment and inflation expectations. Consumers been remarkably resilient in the United States. So big week. I say European PMIs this morning. So watch that for the euro. But let's just go back to our open position. So that's the dollar weakened again. So cable 135.50 is struggling as the European trading desks are well open now, and we're waiting for the open. The cash open, the stock markets, and some of the futures markets, the options markets, in 5 minutes' time. So dollars a tad weaker. What else have we looked at? We looked at gold. Did we look at gold? I can't remember if we looked at gold. 460. Continuing to track higher. So gold's higher, dollars weaker, stocks are higher again. So it's that move. So risk on very much in play. The cash market in Tokyo is just closing. So gold remains bid. If we're trying to trade this one, I don't trade gold really on a short-term basis, but didn't quite get to its Bollinger Band, didn't quite trigger that. You see it's moved down. That would be looking to go long again now on the 5 minute if we get across here. So whether it's a wait and see on gold. But again, a high in the Asian session is taking us to 4474. Again, you see it's big because our opening trades this morning in Asia were down there at 428. Volumes dripping off interestingly as we come into the European Open. So anyway, let's just go back to our open positions. What were we looking at? Sorry, now was it? DAX. See if it's turned yet. Indeed it has. There we go. You see, we've got that touch. It's the first 10. So certainly, if we've been short this continuation trade, we'd have got out there on that touch. So we'd have got out there. So a nice run. And I wouldn't risk losing or giving any of that back. So that's our so we got some out there. We'd left it on, and we'd have got out on the close of that candle as those have crossed. Okay, so again, the flip trade, the scalper would be looking to go take this long potentially now. So that's our short, but remember we've got a lot of nice pennies in the bank. So the move down ahead of the open here, it's literally, you can see we're 2 minutes before the open. That might have been a false move. There's our all-time high, so we're watching that. There's the low of the day. We got all the way down there to 24,888, which is bang on. As you can see there, I was just zooming up again. The fib levels on the daily range ahead of the open has been played out virtually perfectly. 38.2 hit and out. So we've got all of that move. That's that'd be a very satisfying move. And I probably psychologically wouldn't then take the long position that's sort of potentially playing out now. Given we've had such a strong move there on that since our short here. Again, we got in on an up candle, which is quite unusual because the cross happened there, but we were still moving high before we rolled over and moved down. So there's 7:05 after the big volume spike here. Took us to all-time pre-market highs, and then we've sold that off for the 30 minute for the hour into close. So I'm happy to take that and a tentative long as this cross is playing out. So during that time, but obviously if you've got an account where there we go. You see, so what's happened there? We were immediately sold off. So I'm just sitting on my thumbs now, waiting for the open to play out. See whether we're going to continue this short to the downside in this shorter time frame. But if we go up to like the 30-minute time frame, I'm guessing this is still. Oh no, it's not. It has actually rolled over in 30 minutes. So the 30-minute there, you see under it. So that's a key move there under the 20 period moving average on the 30-minute. The hourly chart is probably still longish No, it's showing signs of rolling over because of the short-term frame moves down the hourly chart, but it's still relatively bullish. The hourly support is all the way down there at the low of the day, which is also quite interesting, isn't it? So the 20, see what I'm saying there? The 20 period moving average on the hourly chart is also the low of the day, the opening positions we had in Asian trade this morning at 24,845. So this would still be long on the hourly chart, but here using this strategy, you might have triggered short there at the 6 o'clock candle. So you'd have been short a week. Actually, it hasn't actually. No, you would have got in there 7 o'clock candle because that cross wouldn't have played out at 6 o'clock on conclusion of the 6 o'clock candle. You'd have gone with the bigger volume for the ahead of the open at 7 o'clock. So the hourly trader might have got a tentative short, but he's had to wait. That was the first cross, and then it's gone short there, and that hasn't worked out. And he's gone short again there, but again, very much against the trend, as you can see. So it hasn't reverted. We're still, the trend has outrun the mean reversion currently. So we haven't got through the midpoint of the Bollinger Band. So at this time frame, you'd be waiting for a break of the midline of the Bollinger Band to go short, really. So this is I use this very much on a short-term basis. So the fade into the open hasn't worked. Volumes kicked in as the opening trades go through. We're 2 minutes into the open, so that's the volatility. So we're potentially still trending down, although we've turned up. So we might be a chance for a long position on the conclusion of this candle, potentially. Let's just watch that space. The FTSE, is FTSE playing out as well in the 5 minute? A little bit, not as well as usual. There we go. See what's happened there. There's the 5 to 7. There's the 7 o'clock candle. Big down candle. It's already crossed there, so we've already hit there. So we're looking for a long now. Long, it's rallied up. This hasn't crossed, so the cross is here. So FTSE long here, stop loss down here. Again, that's why I don't really like trading the FTSE. So that's a stop loss. There would have been the entry, but it's much, much choppier than the DAX. It's because of this, that cross there. So we've got in right on the open, or you would have got in right on the open. Oh, is that no, it's ahead of the open there. So you could have taken that, but again, huge, big volume, and you might have, taken the target there on the open and bob that back over 10,000, 10,045. So volume kicking in on that one. So let's do the same thing here. So the FTSE is reacting a little bit different to the DAX. So we've got and it'll be to do with the defence stocks that did really well yesterday. So that's our pre-market high for the FTSE. Get that purple one. Our pre-market low, a bit like the was down here, so we're still quite significantly above that. So our pre-market low was down here at 10,000, so still above 10,000, which is significant. 10,019, 10,020. So that's our range pre-market. There's a volatility kicking in at 7 o'clock, like we saw on the DAX as well. It's to the downside. It moved us down. So our pre-market low was our trigger for getting in. And we've got in, and then it would have gone through target. But interestingly, you can see there on the opening trades, the pre-market high, the market high is now higher than that, but we're struggling. So I'd have taken some out as it's gone through that target, and I'll be looking this now potentially to go with the higher time frame to the upside. Let's say if that's still in play. Yeah, so there, the FTSE still bid to the upside, although the volume you can see overnight is quite weak. The last big candle was the opening trades at 1 o'clock in Asian trades in Singapore and Tokyo. So moving, still moving to the upside a bit more than the DAX. I think if we look at the hourly chart, yeah, the DAX has rolled over a bit. So we've got a bit enthusiastic overnight for those German defence stocks in particular. Obviously, the impact could be some of the PMI data that's coming out and the German inflation that's coming out as well. Obviously, impacts the DAX more than others. But let's have a look what's happening here. So there's that tentative long as played out. So we'd got in there, but we'd have been stopped out if we'd had our stop loss on the low of the day. So we plumbed a new low of the day, but we've made that. So it'd be the volume. If I'd taken that long on the open now, less than the volume position, because we had quite nice, but that's now starting to move back up. So if we'd have been I would have been stopped out. Would I have the stop loss? No, I wouldn't have. Probably wouldn't have had the stop loss that low. Possibly, given that the fibs have played out so well, I'd have had it a little bit lower than where we'd been. So it's still out of it. Probably, in all honesty, I'd have been taken out of that long if I'd taken it. That's what I'm saying. I've been reluctant to take it because it was such a significant gain pre-market. And again, that's one of the benefits of trading manually rather than completely automatedly. Because if this the automated strategy would have automatically taken a long position there at 5 to 8 because the criteria has been fulfilled. We've touched the outside of the Bollinger Band from here. Continuation has moved down. We talked about that before. Let's ignore that. Let's go back to first principles for this strategy. So there's the first touch of the outside Bollinger Band at 725. The K and the D line on the stochastics don't cross till 10 to 8, but we wouldn't have seen that. The clear cross would have been here at 5-2, so it would have gone long there at 24, 8, 9, 9. The stop loss would have been just below the low of the day, so it would have been stopped out on the volatility of the open. That one, it could have re-entered here on the the way the system works, when it's coded, it would have a continuation. It would have re-entered on the conclusion of this candle if this remains like it is as green, and taken some off at that first target at the Bollinger, the stop loss. At the Bollinger Band here. But this has to complete now on this 5-minute time frame. And again, so what was targets coming down is now resistance to the upside. So the fib level, the 61.8 key golden ratio, is where we were getting long here. Remember, that was target 1 on our short position from pre-open. So when this concludes in 2 minutes, that looks like the automated system would have taken this long. When I run this automatically, a coded system, it takes all the trades because you don't know whether you're going to win or lose. So when I'm doing this manually, I apply a bit of what I call my common sense to the market. So I'm reluctant to take the long position, even though the system would have done. Given that we've had such a good move, significant move from one side to the other side of the Bollinger Band so quickly ahead of the open. So I'll be quite chuffed for the day and would be reluctant to start giving some profit back. But nevertheless, I would have gone away, perhaps come back waiting for this candle to finish to perhaps go long. The downside of the risk of it is it's already got to an initial target during the candle formation. And a minute to go, we know with the down move was relatively significant, although it may or may not be over. And we've got this disparity between the DAX and the FTSE as well. That's the other thing we'd be looking at. FTSE still going long, as we said, as our long position here, and it's got to target 1 through the new all-time high, as we said. So that's still long, and the DAX is now. Actually, it's now long as well, so having gone short. So let's see how that plays out when this finishes in a minute or so. So let's just see when that finishes. So with the risk of giving some of our nice pre-market gains back, and indeed the automated system would have lost on here, so that would have been a losing bit there. So we're giving about half our gains back on the automated system. So if I want to check it later, so that's now long at this point now. You see the still moving up, big volume here on the open. So I'm happy to go long. Stop loss. I mean, technically, it would have put it there below that below the spike ahead of the open there. So 24.70, probably something like that. But with a view to moving it up on the completion of the candle moves if that goes up. So that's gone long again. FTSE's already long. And away we go. So, any questions about anything at this strategy or any other strategies, my friends? Let me know. Yash, good morning. What are you trading, my friend, around the open? How are you doing? Let me know. If you want to look at something different, again, let me know. Let's just run through the other markets. I didn't look at the silver market. Remember, we had this new all-time high yesterday for silver. Gold. Actually playing out there. They've got in gold's playing ball with this. So there's the cross there. In fact, and you would have, in fact, it's just there. So there's the touch on the outside. So that again, that would have gone long here, gold. But again, it's a very narrow range there, isn't it? So I don't tend to use this strategy on gold, but it's still triggered there. There's the last. There's the outside touch. See, there's a touch of the Bollinger Band waiting for the cross. The cross is completed there, so that would have been a long position there at 610. Target 1. It's rally. See, it hasn't actually got to target 2. It's turned around and come back. So as you've pulled your stop loss up here, so you'd have got in here. Stop loss would have been down here. Oh, I'd had it a bit lower than that. I'll look to down here somewhere. So as this has moved up, pulled the stop loss up, got through there. Stop loss would have been there. We've come down a bit. I'd have pulled it up to this here at whatever it is, 645. Gone long again, pulled it up behind it. That's a nice strong one. I've probably pulled it up through there, and then it's not got the target, and it's reversed and stopped out there. So there's target 1. We'd have been stopped out there, and then we were waiting for a short because we didn't get to the top. Remember when we first came to look at this, we'd seen we hadn't touched the Bollinger Band, so we had to wait and wait for a long position. So you see that high. So there's that. So the lows are getting higher basically. So we are still trending higher even on this 5-minute chart. So we're waiting for a long, which has happened here because we've gone down. We've touched the outside of the Bollinger Band here. Stochastic lines are still moving down. We get a cross, weakish cross here, but that was our entry. Our stop loss would have been round about just below that. There, keep it nice and tight on gold. Looking for take some off at the Bollinger Band and then target to the top of the Bollinger Band. So again, that one. Come back to this as well if you like. So it's less. I do this less on gold. So, but as we're here, time is it? 8:15. As we're here, I'll just play that one out as well. So that would have gone long. I don't want that line. I just wanted to. Array, so that would have been long there, and that's out. That's stop loss down here somewhere. Okay, anyway, you get the point, hopefully. So, yeah, gold remains bid. Silver is what we came to this charts for. Again, bid overnight. We've gone to 79.35. So, the demand for precious and industrial metals still very much in play. Strong day again yesterday, and as I say, overnight. 79.40 again from that all-time high we got at 80, close to $84 just after Christmas on the 28th of March. Huge rally for gold. All markets are waiting for news releases, I guess, so choppy without clearing. Absolutely. Killian, good morning. You're spot on there. As I said earlier, I don't know if you hear, Killian, the main data there isn't any red impact data today. If we look at if you look at your calendars here on Forex Factory, you can see it's all yellow, medium impact. But these PMIs, remember the PMIs are forward looking. That's a tick, and their services are much more significant than the manufacturing ones. We had that weakness yesterday from US manufacturing. The weakness going the weakest number 47.9. Remember, that's contraction. Anything under 50 is contraction for the sector. So manufacturing, as far as the guys and girls that work in the ordering of kit, equipment and stuff, basically for manufacturers, yesterday in the US was the weakest it's been since November 2022. I think it was, wasn't it? Was it 2022? Well, let's just check that again. I'll check my facts. Take the forecast off just because it confuses me. It was, wasn't it? It was, yeah. So this is, November 2024. Sorry, November 2024, not that far over. But anyway, that's, over 14 months weakness in manufacturing. You know, the president wouldn't want to see that sort of data. Yes, it's not a blip; it's continuing a trend. So things haven't moved up for manufacturing throughout all of despite all the noises the president's been making about repatriating jobs and investment in infrastructure and power plants and all the rest of it in the US. So the data is not validating that. The recovery in Europe, again, Spain doing well. That number's just come across for Spain, 57.1. That's a strong reading for Spanish PMIs. And again, that'll add to the idea that, perhaps the EU don't need to be looking at interest increasing. Well, might be adding to the argument that the EU, the ECB, may be looking to, in fact, increase rates later this year. But certainly, the consensus is nothing changes from the EU this year. Watch the German inflation this morning as the individual states report. If probably some will have already. Let me just check my one of my news feeds here. French December inflation 0.8% versus 0.9%. It's a little bit weaker. I'm not seeing. There's nothing coming through here. Excuse the top of my head. Nothing here about US German inflation just yet. No. Okay, so obviously the big event is the geopolitics going on, and how the Germans, the Russians in particular, are reacting. So silver remains bid is the point of come here. So let's just finally go back to the where are we? Yeah, absolutely, Killian. Yeah, Killian's here saying Chinese policies really influencing metals, especially silver. Yeah, it's been that demand. Remember, I can't remember that quote from last week, but the digital is consumed by the physical. So this expansion of these power plants, the AI boom, it needs the physical resources of copper and silver in particular, and that's why they've rallied. We went to 13,000 a ton for the copper market yesterday here in London on the LME. Silver, both industrial and precious metal, you can cut it both ways with silver, but it's a key industrial metal. Gold more the leader of the precious metals pack, but we've also seen big rises in platinum and palladium and other key commodities, as well as this AI boom continues to move. We had that positive spin from Nvidia overnight as well, adding to with this bubble, which inevitably history will look back on it and probably will be, but there's still we haven't got to the exuberance yet. We've had 2.5 years of this rally for Nvidia now the world's biggest company, and it hasn't popped yet, but it's gone up so parabolically. The coup will happen, and it could happen quite quickly if we don't start seeing some physical reports from companies of the benefits of the AI boom and the push through on productivity. But at the moment, earnings for the second quarter and third quarter this year have been last year were very good. Chatter is they'll be good for the fourth quarter as well. So hence this risk on move we've seen during December and this first part of first few trading days of January. Obviously, this is a lot of risk coming back. Everybody's back at the big volume houses, the US, the Europe, are back at their desks. Obviously, Japan and other parts of Asia didn't slow down as much for Christmas. But that volume is back in the market over the last couple of days as well. So let's see how this peters out after the first few days of trade. And obviously, and then, as Killian said here, what happens next with regard to the Venezuela situation on the wider geopolitical situation. So anyway, let's just have a look at where we were on our 5-minute short-term trading, and I'll leave you in peace and go and get some breakfast myself. So there we go. The fade to the upside was exactly that, as we thought. So we we had taken that long, it would have been stopped out as we had down here. Is that right? Yeah, there we are. And it's reversed. So the trend to the downside. So the uptrend, the high, the pre-market high, that trend we identified ahead of the open. The opening moved higher has been shorted as well, and so now obviously the opening, the pre-market low is the next downside target. So that was as we suspected, or as I was suggesting, the system would have gone long here. I'd have been reluctant to do it because of manually watching, having gained so much here. But then that strong candle there, we did go along. But I said the caveat was, or was it that one? I think might have been, can't remember now. No, it would have been that one. So it would have been immediately stopped out, wouldn't we? Because we had our stop loss just below here. So it would have been immediately stopped out. So there, we wouldn't have lost that much. Actually, we'd have got in here and then got, did we get in here? I thought my brain's gone to fudge now. I think it was that one, wasn't it? It was that second one. So it would have been a bigger stop loss. So we'd have got in there and so we'd have given half of our gains pre-market back, and that's the risk, So the automated system would have gone short. It's now looking to go long again, though, but you would expect, maybe not, the pre-market low. That's why we put it on to be tested in the market session, because there's much more volume now, as you can see here. This first 20 minutes, much more volume than it was when it opened up here. So the last, relatively significant volume stick was the close in New York and the close of the day, which took us to around about these levels here, these lows of this. So this looks like that inevitably will get tested again to the downside. So going long here is a bit premature at the moment. As the FTSE rolled over as well. No, the FTSE's continued. So that divergence between the DAX and the FTSE continues. So we're moving up. Killian, in your opinion, opinions don't really matter, people. Obviously, some opinions from, significant bankers, significant players, significant influencers, people with, with big, huge portfolios can move the market. But in my opinion, is the iBubble going to pop soon within the year? Who knows? No, it doesn't look like it. The questions about return on this eye-watering investment needs to start to show some sort of evidence, whether that's in significant increase in productivity. But it's getting more and more sophisticated. That's the exciting thing. I don't know how old you are, Killian, if you traded or lived through the last big bubble in tech, which is at the beginning of the century, 26 years ago now. I was a much younger guy, but I was very excited about that, and the numbers then was quite exciting. But the returns on some of the new companies were just, ridiculous, and they're even worse now if you look at the future expected earnings returns. The valuations on some of them, triple digits. And that doesn't make sense. But just because it doesn't make sense on paper doesn't mean the stock isn't going to go higher. And that's what you see with exuberance and everybody fear of missing out, all of that sort of scenario. So there's no signs of it yet. There's lots of chatter, but markets do chatter, and that goes on all the time. But at the moment, if you look at the trend is very much up. Nvidia is suddenly the world's biggest company in the last 2 or 3 years from nowhere. But the demand for their hardware, which is what they do, is very, very significant. Obviously, there's risks to that. There's risks about where these chips are made. Obviously, Taiwan and the geopolitical situation there. But at the moment, as we start the new year, the exuberance, the money is in the market at the moment. But again, this might be just a lot of money that was taken out at the end of the year. Lots of tax issues as well around the end of the year for many countries, particularly for the United States. So at the moment, Killian, just follow the trend, and the trend is very much up. And for us, really, the easiest way of doing that is either through an ETF or through, following something like the NASDAQ or the broader S&P 500. There we go, NASDAQ's down. But if you look at the daily trend and the weekly trend for the NASDAQ is still to the up, but you can see this we talked about in Christmas, this consolidation at highs, which is relatively okay, positive at the moment, but the break can be significant. So we have got this sort of consolidation at all-time highs, and it's narrowing. So so this top here was the 30th of October, which is interesting. It was still quite a long way away now, isn't it, when you look at it like that? So October, we went all of November, all of December, we didn't get a new high. So the highs are sort of getting low, the lows are still getting high. So we've got a bit of a wedge. So are we going to break to the upside or to the downside? Big line for many is this 24,000 on the Nasdaq 100, but it's still relatively big, and we're sort of meandering. See how we've meandered because with this high has been not taken out again. The 20-day moving average is sort of meandered like this. So just be careful as ever. Don't be over risk. Don't have all your eggs in one basket. Diversification is key, and obviously as an investor, talking as a trader, that's different. Look for short-term opportunities and take your profit off the table when it's there. Try not to give too much back. But again, for me, as a trend-following trader, I look at different. I don't want to make a copy. I want to look at my sort of standard moving average strategy. We've still got this wave of capacity, so we're still not clear. And again, you can see we're moving down. So for whatever you do. So from what I've observed, the market today is really strange because most of the markets are up, which is new. You talk about today, you mean physically today? Well, that's because we're at the beginning of the year. Remember, so not only have we got the beginning of the month, the beginning of the week. It's only Tuesday. It's the beginning of the year, so a lot of risk, a lot of money that was taken off for bagging of profits or registration of losses for the end of the calendar month, quarter, and year. So obviously the end of December is very, very significant. That has all been bagged, and now it's new money or reinvestments for risk for January. So yes, it's a very strange situation in a sense, you could argue, but seems to be some clear correlation between the recovery, what looks like a potential recovery in crypto, for instance, to the movement in the stock market. So they're positively correlated at the moment. Gold is also up, which is a bit of we can't have all of these things up, but the market is telling us otherwise because the price is the key thing. Everything's still going up at the moment. But yes, it's the beginning of the new cycle. That's the key thing, my friend. And as far as Forex, obviously the dollar has recovered. Let's just look at the euro. Look at the where are we? Euro dollar in this high time frame. The dollar recovered a bit, but since December here, it had a weak run at the beginning of December, and it's recovered towards this weak period again. But it's recovered. The euro dollar here down, but it's only since that's the 24th. The first red candle there was the 24th of December. Very quiet, low volume, low liquidity. And so the dollar's come back a wee bit into the 20-day moving average there as we started the new year. Relatively strong for the dollar, but then we've moved down. Nobody wanted to sell it below 16.50 yesterday, and we're back up here at the moment. So that uptrend, as this current leg looks like it's over, but it's really dollar remains relatively weak. With expectations of at least 2 rate cuts this year and perhaps more. But again, it'll all play out in the year. But yes, it's that time of the year. I don't know if you've seen it, but yes, well observed. So I'm going to go and get some breakfast now. It's 8:30. I've been here an hour. I'm not here normally that long. Let's just finish our indices. So we saw the DAX. So success to the downside. As I say, I would have been very. What's the wrong layout, isn't it? The layout we were trading, which wasn't that one. It was the Bollinger Band stocks, isn't it? We had our. So that's our. That's the daily. Let's go back to our 5-minute. So that remains very much bid. Our 5-minute crossed again. No, we're still going down. That's what we said as we left you, didn't it? There's that low as we thought would be tested. So there we are. We now put into the live market low has also hit the pre-market low, the opening trades this morning. So the trend since 7 o'clock has been down. We captured quite a bit of that lump. We actually caught the top, which is very unusual. Got in right at the top, which is, again, as I say, unusual. The retrace around open was a failure, and we continued to move to the downside. So again, so that you can see the move there. So again, as we said, I mean, as you said before going, it looked like we were going to get to the pre-market low. So again, you could have looked to move that low, but you can see here we're moving down again. So we're trying to find buyers basically on the DAX. It's been sold off. So successful start, and with the FTSE is not playing ball. The FTSE still moving higher, 10,060 we've just been to in the last 15 minutes. So it's still moving higher, and that's to the upside. So that's that long position there at whatever it was, 5.2, and that's moved higher. Got to target 1 through the pre-market high this time with the FTSE, so that we've got an inversion between the FTSE and the DAX, and now it's moved higher. But of the two, if you're only trading one, I'd prefer to trade the DAX from the movement. And the Dow, it was what were we doing? I can't remember what we did there. What we did on the Dow. So that was that short. There's the cross, there's the outside, there's the cross there, that's it. So there's, did we get in here? I can't remember what we did. Was it that long ago? We thought at 7 o'clock. Well, anyway, that would have been also short, and it's gone down, 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 hit target, and so on. So that's also the DAX and the Dow playing out, and we're moving down quite nicely. That's trending low. That's a nice move on the Dow as well. So the DAX and the Dow playing out. We had an odd technical one, but that's still short DAX. So there we go. Thank you very much for your time and comments. Killian in particular, my friend, thank you very much for that. See you again sometime. Nash, you didn't speak to me. I don't know what you're trading. But stay well, everyone. Watch those as we're speaking. Presumably the data's come out, which is why we've got to move in the or some move in the dark. But watch these these services PMIs from Europe. That's next one is the Italian one at 1:45. We've had the Spanish and just the Spanish at the moment. French at 10:00, German at 5:09, and UK at 9 o'clock. So next half an hour could be key for the rest of those markets. So take care, everyone. See you tomorrow. Tomorrow is we've got Australian inflation. Those of you trading in Asia overnight, watch that in particular. Wednesday, big day. Then we'll be with you for the private payrolls, the ADP, automated data processing. Literally is what it stands for. Payroll change. Remember, the correlation to non-farm payrolls has broken down somewhat, but this one, because it's a private number, has been readily available during the government lockdown. But what real markets are looking, what the real data looks like on Friday from the non-farm payroll is going to be clean at least. But see what that looks like. So 50,000 for ADP, 60-odd thousand for NFP is the prediction at the moment. So see what that looks like tomorrow. We'll be live with you for that tomorrow. Also, we've got services PMIs and the JOLTS. So it's acronym day, ADP, JOLTS, and ISM PMIs tomorrow. So big, significant day tomorrow. Friday is the other big day, jobs day. So lots going on this week. Take care, everyone. We will see you tomorrow. Be good, be safe, and do follow us on our Discord group. We put all our positions, our trades from last night. I'll show you what we went last night. I think the unique one is adding. Thank you for that. Unique one, 421, 421. So I was from last night. I was long cable and was short CAD Swiss and Euro Swiss. I think they're out of the money, but that's definitely in the money. And we were flat for yesterday. Well, we were down 0.75 and 1 point yesterday. So from 3 trades from Friday night. a big winner and 2 losers yesterday, so cancel each other out. So anyway, follow us here on our Discord group, and obviously, if you're not with us, we are the Prop Trade. We are the grown-ups in the room. If you want to join us, this is our website, theproptrade.com. Email, password. Let me just go into my demo accounts, and all sorts of accounts, all sorts of resources available for you. Obviously, this is the main one, our daily webinar, video, but different platforms. We've got CTrader. This one we've been looking at today is Trade Locker, all different, so either web or Windows, Mac based. Trade Locker and CTrader, all different types of challenges, different types of accounts. So do come and join us. Okay, see you tomorrow for the data dump from the United States. All the very best, everyone. See you soon. Be good, be safe, and goodbye from Tuesday.